class. Hope you are all doing fine. Welcome to our accounting grade 8 radio lesson and everyone who has an interest in the subject. My name is Natalia and today we are going to talk about the effect of cash transaction on the accounting equation. You should please have your pen and a notebook ready. Remember always to take notes of the main points during the lesson and do not miss our lesson activity or quiz at the end of the lesson. At the end of this lesson, you should be able to indicate the effect of cash transaction on the accounting equation. Good afternoon, class.
Good afternoon, Miss.
I would like to welcome you to our class and please take your seat. Well, accounting equation is a formula that shows the relationship between assets, owner's equity, and liabilities accounts in the business.
Miss Natalia, last time we learned that all transactions can be classified as influencing the owner's equity, assets, and liabilities. These three broad classifications represent the elements of the accounting equation. Hence, these elements also have an effect on one another. But I have a question. How can cash transactions have an effect on the accounting equation?
I also have the same question since owner's equity plus liability is always equals to assets.
Thank you for the good questions. Each transaction has an effect on at least two accounts. The total of each side of the accounting equation will always be equal as a result of any transaction. We can also use the ICE method to indicate the effect of cash transaction on the accounting equation. Now, the I stands for identify the two accounts involved. The C stands for classify the two accounts involved. And then the E stands for show the effect of the transaction on the accounting equation.
Since accounting equation states that assets equals to owner's equity plus liabilities, what will be the effect of the accounting equation on a transaction if the business bought equipment for and paid by EFT?
Well, the two accounts in the transaction have the effect on both sides of the accounting equation. But sometimes the two accounts in some transaction might affect elements from the same side of the equation.
The two accounts names are equipment and bank, and they are both assets. I believe one account has to increase and another account has to decrease.
Thanks a lot. Those two accounts in the transaction affects the same side of the accounting equation because they are both assets. When the two accounts in a transaction are both assets, then one asset account must increase while the other asset account must decrease. We then have first to identify the two accounts involved, which is equipment and bank. Secondly, we classify the two types of accounts, which are both assets. And lastly, we need to show the effect whether the accounts will increase or decrease. Mazila, can you identify which account will increase and which account will decrease?
Miss, I think the equipment account will increase because equipment in the business have increased. And I also think bank will decrease because we used money to buy this equipment. Isn't that so, Miss?
Brilliant. The above transaction affect the same side of the equation, which is now equipment, and bank, which are both assets. When you are buying something, you will have more of it, which means that the value of the equipment in the business will increase. We have paid for this equipment by EFT, which means that money is coming out from our business bank account. Therefore, money in the bank account will decrease.
But then what happens if cash is deposited into the business bank account?
I believe cash will decrease and the bank account will increase.
Outstanding. Both accounts are still assets. Money deposited came from the cash available in the business. Therefore, cash in the business will decrease, while the bank balance will increase when the money is deposited into the bank account.
Oh, okay, Miss Natalia. I'm getting it now.
Let's say the owner transferred amount of money into his business account as capital. Will bank increase and will capital decrease?
Good question, Mazila. First, Let us identify the two accounts in the transaction.
The two accounts are bank and the capital account.
Wait, I think since bank is an asset and capital is an owner's equity, I'm not sure, but I think the bank account will increase while the capital account decreases.
Thank you very much. You have tried. Bank is an asset while capital is an owner's equity account. The money was deposited into the bank account. Therefore, the money in the business bank account will increase. When the owner puts money into the business, his monetary interest in the business increases. Therefore, capital will increase, which will lead to the increase in the owner's equity.
Miss, but what will happen when the owner withdraws money by debit card from his business for personal use?
When owners withdraw money from the bank by debit card, one account is bank and the other account is drawings. Bank account will decrease and owner's equity will decrease because of drawings.
Well done, Sylvia. If money is withdrawn from the account, the money in the bank account decreases. While when the owner withdraws money from the business for personal use, his monetary interest in the business decreases, which is then referred to as drawings. Therefore, drawings decreases owner's equity.
Let me say that the business sells goods for cash to a customer. Cash and sales are the two accounts. Cash account will increase and owner's equity will increase because income increases owner's equity.
Oh, now I'm getting it. Cash is an asset, more money, which means more money in the business, while sales is an income, which will increase owner's equity.
Thank you, Mazila. Good answer indeed. When we receive cash, which is an asset for goods sold, cash in the business will increase. Hence, sales is an income. Income increases profit in the business. When profit increases, owner's equity increases too.
How about if the business pays for expenses? For example, it pays cash for stationery.
Well, cash is an asset. The business cash will decrease, and stationery is an expense. Expenses decreases owner's equity.
You have tried harder. When we pay for stationery by cash, cash in the business decreases, while stationery is an expense which decreases profit. When profit decreases, owner's equity decreases too.
Well, imagine the business withdraws a certain amount of money by a debit card for business use. It means cash and bank are both assets. We have more cash in the business and less money in the business account.
When two accounts are both assets, one account will have to increase, another account will have to decrease. So cash will increase and the bank will decrease.
Thank you for the contribution. Money available in the business as cash will increase when we withdraw cash for the business use. And if we withdraw money with a debit card, the money in the bank account decreases.
This is a very interesting lesson.
What have you learned in the lesson, Mazila?
I have learned that capital and income always increases owner's equity, while drawings and expenses decreases owner's equity, and cash transactions have no effect on liabilities.
Oh, and I also learned that when both accounts are assets, one account has to increase and one account has to decrease. All income increases the business profit, while all expenses decrease profit of the business. Capital increases owner's equity, and drawings decreases owner's equity.
Well, we have come to the end of our program, but before we sign out, I would love you to answer the following questions. Question 1. What is the effect of income on the owner's equity? Question 2. What is the effect of expenses on owner's equity? Question 3. State the accounting equation. This lesson was written by Miss Victoria Nangobe. Until next time, goodbye.
This program was brought to you by NAMCOL with funding from the Ministry of Education, Arts and Culture and the Commonwealth of Learning.